All right, so the short version of this video is I'm not seeing much upward price action for the time being for any of the meme stocks. We are probably going to see a little bit downside first. That's no good. Yeah, but the reason I say that is if you look at the options chain, like for GME, I'm not seeing too much. If I click and scroll down, I'm not seeing too many calls or puts that are particularly bullish. Nothing like what Roaring Kitty did a few months ago. Nothing like that. I'm not seeing any 200,000 open interest strike price things going on at all. Not much of an opportunity for a gamma squeeze. If you type in AMC, similar story. Again, we're not seeing too much. But it does look like possibly more puts are being sold than calls based on the call to put ratio going bullish. It's hard saying. Someone in the future might actually load up, which we don't know that. They could. And then you have to look at the overall market. The overall market is not looking good due to recession fears, as I'll get into in a little bit. So, as we can see, Mr. Wolf, much of the stock market went down last Friday. ARK, Berkshire Hathaway, mid and large caps, small caps, the NASDAQ, the Qs, SPY. A lot of it went down. Why? Why did it go down? Well, there are talks of recession fears. For example, if we bring up the economic calendar, we have initial jobless claims, 249K versus 235 the previous month. If we scroll down, we can see our unemployment rate has increased to 4.3% compared to last month's 4.1. That's not good. And what else did this do? This triggered the SOM rule. SOM rule was triggered Friday after a surprise jump in the US unemployment rate. Every time the SOM rule has been triggered, we usually have a recession after that. And this is all happening at the same time as yield curves for bonds are uninverting. It's happening when unemployment is going up. And the Fed plans to do an interest rate cut this September, most likely. At least that is what the market is pricing in and what people think. Okay, so what does that actually mean for the meme stocks? The meme stocks. Oh, I can get to that. And guess what? We are going down on those too. But that also means there has been a major dip before every rip as well. As you can see here on a 5-year time frame, we are dipping, but that doesn't mean that it's going to do that forever. There is probably going to be a nice little rip afterwards. As you can see here, if it goes down, it jumps up. If it goes down here, it pops up again. It's very common to see some kind of recovery after every dip. So AMC is the same thing. Dip, rip, dip, rip, dip, rip, dip, rip. But AMC hasn't had its dip yet. As you can see though, OBV is at all-time highs. People are not wanting to sell this thing. Same with GME, OBV at all-time high. There's a lot more buying than selling. If we go to smaller time frames, let's go over here. Smaller time frames, as you can see with GME, we could do GME first because that has the most stuff to it that I've drawn for it anyway. We can see that volume is still low. And yes, like I said, we are going down. Down? You said it was going to go up. It did go up. We made this video way back here. That was the last video we made. It was roughly a month ago. We said that it would either come down to fill this gap or it would bounce off the 50 EMA, which it did, and we started moving upwards. But what happened with that is that there were 66,000 call options in the options chain that looked like that they were going to go into the money. As you can see, the bears stopped the price right at 29.79. So nobody could execute any of those call options to push the thing higher. Because it rejected, it has only one place to go, which is down. But we did end the week on the daily with a spinning top or a doji, whatever you want to call it. It's on the verge of being a doji because of how skinny the body is, but you could argue it's a spinning top if you zoom in. That could signify a reversal. We might not even fill this gap, but you never know. This gap at 1968, I believe, is something that we should look out for because the 200-day moving average is also in that range as well. It could come close the gap and bounce off the 200 EMA. That's what could happen. Or it could come when you look at the VRPV, all these blue bars, there isn't much trading or liquidity during that gap. It could come all the way back down to 17. It's a possibility. Well, then you've got to roll the vote if it comes down that far. Yes, indeed. I might, depending on what I have as far as capital. Now, when you look at AMC, what looks like is going to happen is we are going to get a smaller head and shoulders right here, and right here. That could be a possibility. We don't know. And yes, AMC was going up as well after this wolf wave failed. Wolf wave? Did you name that after me? No, that's not after you. What? You're trying to defame me. This is horrible. No, I'm not. I'm not trying to defame you. The wolf wave. Wolf wave patterns were first identified by Bill Wolf and his son Brian Wolf. That wasn't you. Are you Brian? Are you Bill? No. But I thought I was famous. You're not famous, Mr. Wolf. We've only made 2 videos. Most people don't know you exist even. Well, you need to change that. You need to make me famous. And you need to make me money. You need to make the stocks go up. Me make the stocks go up. You're working for me, buddy. You don't do anything all day. You just sit there while I'm asleep before work. Well, I suppose you're right. If you look at the MACD, the OBV, those are at all-time highs for both of the stocks. The OBV, hardly any selling going on here. A whole ton of buying. Look at AMC. Like OBV is at an all-time high for AMC. No, the MACD, it looks like we could cross down on the MACD. That could indicate a little more downside to that gap fill I was talking about. I will talk about in a little bit here. Bollinger Bands, getting skinny. However, a lot of times when the Bollinger Bands get skinny for AMC, at least post reverse split, we've seen a downside, a dump. So those might not be the most accurate as far as AMC goes for any upside. When you look at GME on the other hand, GME is a little bit different, Mr. Wolf. Yes. So, as you can see, when the Bollinger Bands have gotten skinny here, we've had a dump before a sharp recovery. Down here, they're starting to get skinny. We saw a dump before the huge rip last May, I believe. So we could be seeing something a little similar. We could be seeing this dump as the Bollinger Bands might expand a little more before we see that rocket upwards. MFI and stochastics. AMC could see a little bit more downside before those become oversold. GME is already kind of getting there. As we can see the stochastics are a little bit further down as far as the stochastic RSI. But the RSI itself could come down a little further, as well as the MFI for both stocks.